Welcome to Trading Lounge on the European indices, and I'd like to start with the Stoxx50 here on the daily chart for a couple of reasons. Here is that where this market certainly one of the ones that are leading to the downside here, and we've completed five waves up here of wave 5, of wave 3 here. And now we're entering into this wave 4 here. Now, wave 4 can be quite a complicated structure. I've just got it here as an A and a B and a C as a starting point. Once we've completed this first leg down here, and this goes for the DAX and the AEX and so on, this first leg here is wave A here. Wave A can be in 5 waves or it can be in 3 waves. B wave's always in 3 and C wave's always in 5, except in a triangle where it will be in 3 waves. So if wave A here is, there's basically 12 corrections. There's always a debate between 11 and 12, but the main point here is that out of all of those types of corrections, if we get 5 waves down here or 3 waves down here, we can eliminate pretty much half of those corrections, and then we'll be down to 5 or 6 different types of corrections. So it's quite important that we don't really get into the guessing game of calling this an A and a B and a C or a triangle beforehand. First of all, we need to see what the A wave is here, if it's in 3 waves or 5 waves. I'm using this one here too also because this was wave 4 here, and even though it was sort of pretty much in a straight line, it was very complicated in its production. So we need to take that on board. The other point too is that this wave 4 here is a minor degree, and this one here is the next degree higher, the intermediate degree. So because we use the trading levels over here as a price ratio, also know too that, and also within structures, is that pretty much the 61.8%, the 60%, roughly 62%. So we could say that the difference between these two here would be looking between, that 60%. So we could expect this wave 4 here to be 60% bigger than this one here. To take that as a bit of a guide stick, okay, just as a bit of a rule of thumb. So we want to see a larger correction than this one here, and we could probably also assume that it's going to be messy along the way. Currently it's quite simple, and we've got a nice impulse wave here, and because we've got an impulse wave here, we know that after a corrective move we're going to get another move down. So it is starting quite nicely here. So in regards to the DAX here on the monthly chart here, I think we had a look at this the other day, but just in case we didn't, cycle degree 3, an A and a B and a C for cycle degree 4 here. Now you could assume that this is also wave 1 up here and wave 2 coming back here, but on the S&P 500, this low moving down here took out this low here, right? So it's highly likely that this is wave 4 here, okay? So, not that it matters a great deal at this particular point, but we're from wave 4 here up to cycle degree 5 here. We've got primary degree 1 and 2 and 3 and 4 here, and then we're going up for 5. So in wave 5 here, we're looking for 5 waves of the next smaller degree. So if we go to the weekly chart, but just before we do that, so we've got 1 and 2 and 3 and 4 here. We're coming down into wave 4 here now, okay, just starting that. And then we've got wave 5 up here. So wave 5 could take the same amount of time as wave 1 here, or a little bit shorter or a bit longer, we won't know, but we'll be counting the waves up there. But the important point here is that this is where the large bear market will start at this point. I mean, this cycle degree wave 4 here in black here should come back down to the previous wave 4 here of 1 lesser degree here. So it's quite a it's a pretty serious situation really. So you need to get your sort of well, at least consider it and have a strategy in place for not only your portfolio but other assets as well. So going from wave 4 here to wave 5 here, let's just go into the weekly chart and pick up that wave 4, which is this one here. And it's all pretty simple from this point here. So we've got, let me just squash this up a little bit. So weekly chart, primary wave 4, intermediate wave 1 and 2 here, and then you can see quite clearly we've got 1 and 2, a nice strong third wave here with 5 waves, and as expected wave 4 here, and then wave 5 here. Because the extension's in wave 3, that means that wave 5 and wave 1 will be roughly the same, which they are, and we're starting to see a turn here, so we can confirm that turn now. Put that little guy on top there because we're looking for the first little 5 waves that are coming down. So we're looking for this wave 4 here to pull back to the wave 4 of 1 lesser degree here, or another way to look at that would be the 38.2%. So putting that on top there, 38.2%. In this case, it's quite perfect. It will come down to this one here, and also it will sort of struggle across this trend line through here as well. It's normal for and expected that from wave 2, the pivot on this trend line through here, it's expected that it would break that trend line channel there, okay? And then we push up for wave 5, and then that gives us the top of these 5 waves here of minor degree, then intermediate degree, primary degree, and cycle degree here, and this would also probably be this will be a super cycle degree up here as well, so another 5th wave up here. So a very serious top to play out here in this one here. Into the daily chart here, just to break this down a little bit further now. So we've got wave 4 of minor degree here, and we were counting these ones up here. So we've got this top in, and the first thing one of the most important things here in this case is that we were looking for the first 5 waves down, which we pretty much have now. We'll look at that in a moment. So I don't know if we're going to get 5 waves down here or 3 waves down here, okay? But in terms of trading, we want to build into this particular structure here, and we'll know once it starts here, because if it's a wave C, it will be on more of an angle than wave A is normally the sharpest move down in a corrective move. I'll just go over this. So a wave A coming down here is normally the sharpest, and then you have wave B, and then wave C is normally on a bit more of an angle like that. You know, the more of the angle it is, the stronger the next move up's going to be. But if we start to see this one move down, you know, sharper than this move here, then we know that this move down has got the personality of a wave 3. So this is the one we want to short here, and what we're looking for now is the bounce off the 13,000. And then we can look to build into that onto the downside here, and this is also with stock in most markets around the world as well. So we can start building in some short trades, but it will really be after the bounce occurs here, because obviously this is created by stock. And the other point here too, I've got a nice 5 waves here and 3 waves here and 5 waves here, but we don't know if that's going to be the case yet either. We may end up with a really large triangle pattern going across here as well. So the triangle pattern would basically be you know, looking sort of like this here, and then we would see down to here, back up to here, high 3, 4 and 5, and then up here. So there's a variety of things that can happen here, but our main interest is just to short this leg here as such. So just moving into perhaps I should have gone to the well, this is what we drew out last time here. So when we were speaking last time, we were looking for a bounce off the 13,000, and we've got the bounce, and we're looking for an A and a B and a C wave here, and then we're looking for this move down here. So I'm just going to go to the hourly chart here with a little bit more detail. So this is where we are here at the moment. So wave 3 up here, wave 1 and 2, nice strong third wave. See how quick it is here, and then an A and a B and a C here for, whoops, let's just put that in as wave 4 and save that. And yeah, look, we're looking for some sort of correction here, as you know, as we mentioned, and the A wave, the B wave, and the C wave. Now, I'm not very happy with this B wave, by the way, because it does appears to me to count down as 5 waves here. So this may get a little bit messy in here. But the main point was, is, as I mentioned as well, is that you can trade down to the 13,000, and then we won't really trade again until we can figure out the correction. And you know, the correction, once it matures, then it's easier to recognize, you know. So that's really what I think that we should do. I mentioned that we can trade the bounce, you can buy on the 13,000 and so on. But it really is, it's this move that's going to come down here. This is from this high to this low here, or the 13,000. This is the 50-60% retracement level here. It may move up to here, it may not. It's our job to you know, track those little. There should be 5 waves in the C wave here, so we can track those. And then even when we get to the top here, it's not like we have to sort of, you know, unless it's really clear that we've got the 5 waves there. But we can also wait for the next little move down in 5 waves, then the retest here, then to short here, or, you know, put a line through here, because this will be in 3 waves moving up. So there's a lot we can do within all of this, but I need to see if we get this first, okay, because this looks like 5 waves here, so it makes me sort of think, you know, maybe this is wave 1 and 2 and 3 and a high wave 4 and a wave 5 to come down here, then the ABC. So it can get messy in here. The other point that I want to make is, of course, we don't want to miss anything. So normally when a market's coming down, it will, you know, come down and then bounce off here like it has. And then it can come down again. So we don't even really want to chase this move down through here. We'd have to wait for the retest, find that reference point here, and then if that reference point is triggered from that point, then we know we're on our way. Because sometimes when they you know, come down and through the level here and come back up, they'll just, you know, they'll continue back up here again, you know, in their own little way. So those reference points is, you know, create a safe trade. It's obviously not the best price, but it's very helpful. So let's just move on to the AEX, and once again as well here for the AEX in the bigger picture, it's much the same as the Stoxx50 and the DAX, and we're looking for a move down as an A and a B and a C down into the wave 4 here. So once again, this is wave 4 here, and that's the size of it and the complexity of it. So that will pretty much be the fingerprint for this one over here as well. It may be a different pattern, but it will be, you know, if you can imagine this being 60% bigger over here, then it's quite a time-consuming event, and it requires a lot of patience, and the idea is not to lose money in this market, in this pattern. And the patterns are really, we want this 3rd wave down here, which will be fine, and then once if this is simple in 5 waves, then this could be complex in wave B here. So it'll be this other leg down here that we can really work with. So yeah, there's parts of it we can play with. And on the hourly chart for this market here, looking at it like this here, so wave 1 and 2, we have a nice little 5 wave structure here, which is nice. Wave 2, wave 3 is very sharp, which is great. I'm thinking this is wave 4 here with then wave 1. It's not very clear in here. This could also be an A and a B and a C wave over here, like I have on the DAX here. But I've got it as 1 and 2 and 3 and 4 and 5 here. So I'm a little bit unsure, but we're at 540 here. This market's going to move with the DAX, and I'm not too fussed about it at this stage, because what we're really looking for here is we're looking for some type of correction here. Okay, the same with the DAX. So we'll not interested in trading this. We just want the pattern to mature so we can look for the setup. So just patience. However, if this market gives us a trigger like this at the low here, where it breaks through here, then, you know, breaks through, then comes back, then we can take that reference point out here as a short trade, so we don't miss it, in case it just keeps on cascading down and we don't get this, you know. Yeah, we've got to cover it, we've got to have a plan B there. And the FTSE. Okay, so this is basically the FTSE on the bigger picture here with cycle degree wave 4 here, and then 1 and 2 and 3 and 4 of primary degree, and then wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 here. Wave 5 is a little bit small here, but I got to pull it into line with the other markets. You know, I would also be thinking too that perhaps this is just wave 1 up here with wave 2 coming back, and then 3, 4 and 5 here to finish off wave 3 here, because normally I see wave 3 at a level. That's what I normally see here. So it's a little bit short here. So, but we'll work with what we got here, but I'll just be mindful of this situation as well. But yeah, otherwise we need to look at this with, you know, coming down into wave 4 here. And then up for wave 5 to finish on the weekly. So on the daily, give it a bit more space in here to look at. This is where we're looking for here. You know, this wave 5 here just took the top out here, or probably even didn't take it out, but it doesn't really matter. The main point here in Elliott rules is that, do we have 5 waves in here? The other point here too is that, as I just mentioned, you know, if this is going to be wave 1 up here, then we'll look for an A and a B and a C back for wave 2, and then a move up into here as waves 3, 4 and 5. I mean, the other markets may do that as well. I doubt it though, because they're in much better position for where they should be as a wave 5 above here, and this wave 5 equals wave 1 in terms of distance and time and so on. But that said, and with all of those too, so this move here from this low to this high here, then this will be a bit of a stopping point here, the 50-60% retracement level on all of those markets. So we should really know where that space is there. We can see that this is hitting on the 50% retracement level here as well. So I'll just clean that up a bit. Just move these segments here. But yeah, look, anyway, that's going to be a bit of a sticking point here. So as long as you know that, that's fine. But yeah, in this case here, it should come down to the wave 4 of 1 lesser degree, which is here. But I also want to point out too that the 38.2% retracement level is actually down here lower as well. So we may see this come down even lower, especially when it never made a really strong high up here. So it's kind of like, well, it's got to reach the 38.2% to tune back into the overall count. So we'll just keep those two there in mind here as well, with all of this. And just on the hourly chart here, so much the same sort of countdown here as the other global markets in terms of wave 1 here, wave 2, which is fine, then 1, 2, 3, 4, 5 for 1 and back for 2, and wave 3 here and wave 4 here. Does overlap wave 1 here a little bit, so that sort of bugs me a little bit, but then wave 5 down of 3, and then ABC for wave 4, and also wave 5 here is getting a bit small as well, but I can see that there's, that the strong wave 4 here, it's sort of reluctant to go down. It's sitting at a, nice whole number here. So once again here as well, I'm really only interested in the short trade. Don't want to get chopped up in all of this, what's going to occur here as a corrective rally here. So, overall the strategy should just to be patient, and let's just allow the corrective rallies to come into play now, as I've mentioned, coming down here, not to short it into these situations here. But yeah, at the same time, if we get a reference point that comes down, the market bounces off here, has its corrective moves down through here and creates a nice reference point here, well then we'll take that short trade when it goes down. It may be a trap and we can get caught on it, but we have to trade what we see, and we have to take the signals as they present themselves as well, because we're in this direction now. We have impulse waves moving in, so we need to be, we need to trade the trend, and the trend is confirmed now. It's not 3 waves down, it's 5 waves down, so we need to be on that side of it. Alrighty, thanks for tuning in. Cheers.